Hello, ladies and gentlemen. Welcome back to the course. This is the last segment. I apologize for the confusion in the beginning of the last course about risk management. Oh well. So now we are going to actually talk about the indicator, how I came up with it, and the success of using it and how powerful it is in trading. So when you guys sign up for the course, you'll contact me, and then I'll give you access uh, inside to use the indicator. Now, one thing I do ask is not to credit it as your own. And if I find out that you did, I will remove your access. Because, there's a lot of work that goes behind building these. I think I spent six months or so building this one. So, it was a lot of trial and error to come up with a solution to see a visual aspect of a trend and know when your bounces are and your buys and sells. So just keep that in mind when you guys use it, or use anybody else's indicators that they put a lot of work into it. But anyways, once you get it, it'll be in the indicator part. It'll be in your favorites. Okay, I got Canadians favorite. His is very similar to mine. Mine just runs a little differently in the algorithms, but it works. So you can't really complain, right? As far as I've seen, not anybody really has these on TradingView. So you're getting something very unique and very confusing at the same time. So I'm going to fix that confusion today. So anyways, once you go to the indicator, you favor it, you'll see the invite only scripts, right? That's where you click on that, and then the vitality bands will pop up. This is exactly how it will look. Okay. So let's just get to the actual the features. You click the cogwheel right here. You won't have this source code. Nobody will know the source code. Click the cogwheel. Okay, give it a second. It's a big algorithm, so it does take a little bit to load. So if you have a laptop, I'm sorry, but I have been able to use this on my mobile, so I know it works. There's a lot of stuff here. I think maybe eventually I'll probably get rid of some of the numbering parts, just because you can change the numbers on it, and I don't want that to happen for you guys. Like right now, I just changed the numbers, so really you don't need to be in here at all. Okay. But this is just, I'm going to show you how you can tweak it to your own. And another thing I appreciate is not posting this indicator in the general Discord. Keep it into the student section only, just because I don't want to get a whole bunch of other people asking me how you got it. Sure, they can go through the course, but if they, it'll cause a lot of issues. So I just appreciate if you guys do that for me. So everything just stays default here, and I'll just break through what exactly is going on. So if I click the bands here, this will remove this band. Okay, that's your short time frame, and this is your long time frame. Okay, if you uncheck that one, everything goes off, obviously. You want to keep it at a high, low, close 3. That's part of the algorithm. Now, I've for testing purposes, I've kept it so you can change it, but just don't, because it works perfectly how everything is right now. Now, when it comes to the theme, I incorporated a theme into this just because it gets boring looking at the same stuff all the time. So it's fun to, kind of spice it up. This is a fun little bullish bearish thing. It's the logistics of it. I mean, it's more novelty for me. I just like it. But you can turn it off, and it'll just be two shades, just like this. You can change the colors to whatever colors you want. You can see there's a lot different colors here. And then if you want it like a lighter color, it'll change the lightness on both the colors here. So it's a fun theme. Again, it's if you want to use it or not. If you click this again, it'll put things in gray, and then the colors that you actually implemented. So you can just keep changing those colors, change it to dark. You can change these to light gray. You see what I'm saying? So it's fun. Change it to red, make it look all crazy. Cool, right? Okay. So that's the theme part. Now the style, you have two here. If you're using both of the short length and the long, which you probably will be once I teach you, you can change, like what I'll do is I'll change the long to like pink and then the short to blue. So now this is the long. Let me fix this color because it's going to drive me crazy. But like, let's just say if you're going on like a black background. I don't know why TradingView does this. There we go. You just want it black. You see it gives like a different look to it. So maybe you don't want to look at that white color. So you can change everything black, and look at that. You can still read your chart. Looks nice. See? That was the whole purpose. So let's change this. Back to just normal colors for now. Then you can do whatever you want later. So that's fine. Okay. So first of all, what is 390? What is that? So 390 is the intervals, the days that it's measuring, basically. So I'm not going to go into all the crazy calculations and how everything works, but just think of it that it looks for the average price where it likes to bounce, which is here. Now this is on a big scale, and then this is when you get in the oversold areas, and this is based on Fibonacci numbers, which I talked about Fibonacci before. So this is going off that method, and the reason why bands work is because this, nothing moves in a straight line. Everything flows. So that's what's happening. Everything's flowing here, right? And to know how successful this is, all we have to do is look at this 8-hour chart, and we know exactly when we need to sell to an extent. Again, when you use the smaller time frame, it helps you out. But let's just say, for instance, we knew we were getting oversold here, right? You had to sell that. So it sold, and then it bounced up, but it's still kind of in that oversold area. And finally, here we go. This is this like mean here. This is the where the price likes to bounce around, which it did. And anytime we have concern is if this candle breaks this pink line, and this is called your VWAP, which basically means volume weighted average price. Okay, so it's based off volume, which is very important in trading. So if it would have broke through, which it clearly did here, we sell, right? We don't play this unless we're playing the short, like I've talked before. So this helps you a lot here. This is how I definitely knew we were still in this bearish situation. But honestly, I mean, just looking at this channel, we weren't hitting any of these previous peaks at all. We had like triple bounce or something, triple top here maybe, pretty close, right? But other than that, it looked pretty bearish, and then it got really bearish here. So how would I have known that I was supposed to play the bounce right there? Well, what's very important when you're using this indicator is to use different time frames. Because I wouldn't have known anything about this data, right? Because it just looks like it just kind of goes up. It doesn't bounce here, which would be a rule that you would want to go on. It just kind of bounces here. Okay. So let's move it to the daily. Oh, wait, okay, now the daily is showing something totally different, isn't it? It's a lot broader. Okay. Now, when you're checking some of the alts, there's not enough data that sometimes it's not going to draw the whole graph like it is right here, right? The whole bands. So there's nothing wrong with the indicator. It's just there's not enough data for volume to give you an accurate estimate where the bounces are going to be. Okay. So again, here we are in this oversold area, and it dropped. This is where you knew that, you know, it wasn't going to bounce back up, right? In that 12K range. It fell here, it bounced here perfectly. I mean, perfectly. Look at that. This was a fake, but this right here indicated, that told me, okay. It climbed back up. Again, you can't rely on how you would have sold this, but I'm going to show you. It bounced here and then it fell, right? Because any time a candle breaks the VWAP like it did right here, you sell. You hold here, you sell here. And that's fine. It fell down, didn't it? So you would have lost money for sure. All the way down to 62. And then it bounced. But it didn't break this yet. So you just would have, you're still making profit here. You're still doing fine, right? If you would have sold it here, you're doing great. 9K. Did all this nonsense. Now, this longer candle, this confirmed a bounce, right? Because it did the exact same thing this did, except the opposite. So now you hold it. So then this is how I knew we were in a bear market, because it broke this VWAP, this daily VWAP. Okay. Now, if I put this on a weekly, it's going to disappear. You see that? Because there's not enough data for the bands to read it. And that's good, because you don't want inaccurate, bands, telling you should do this and this, and it's wrong, right? Trying to make money, not lose money. Okay. So this is, I like using Bitcoin. It's a great example. So basically it's just reading all the data and then averaging it out. So we can use the same 390, and 390 is the calculation for VWAP at 6.5 hours a day. Okay. That's how that number comes, how you come up with that number. So then let's go, to 5 minutes. And you can blow it up like this. However, it's easy to see your candles, but you get the idea. So we can play the historical part here if we want. We can see how it was just playing around this mean, or your VWAP, right? This indicated that it was oversold. That's where it bounced. But then it had a lot of resistance here. And another thing you can treat this as, this line, is like a support and resistance, if that helps. So then it broke here, and then here you go, you're overbought, so then it sold. And it kind of played in that overbought territory. You just would have held here. This was consolidation. Right here, drop. People got screwed here, guaranteed. But see, that's what's nice about this indicator, because you don't get screwed. Because as long as you're playing by the rules and using it how it's supposed to be, you won't get in trouble. But I guarantee a lot of people held here and didn't let go, and then it fell, right? Then they lost a lot of money. So this is all overbought. This is where you just wait for a bounce. So the way this thing works and why it's so great is it always makes a pattern in the bands. Okay? So it's kind of hard to show. Maybe if I squeeze a little bit, it's hard to tell. This is not the best example. But we can use at least these two spots right here as indicating that it likes to bounce off the second deviation. So this is your first deviation, second, and then your third. This is where your third is like where you obviously know it's going to bounce, right? It has to bounce. And then your second is where it could bounce, and then your first is questionable. It could just do like it did here, play it crazy, and you never know what's going on. But this definitely shows patterns. So it showed two bounces on the same band. So that would have gave you a great indication when it dropped like right here and it fell here, you knew it was going to bounce again. Okay. So it prepares you, I guess, for, a bounce that's coming. Now this thing works really great on a 30-minute. So we can put it on a 30-minute here. And we still see these the same bounces right off this first band because this is a longer time frame now. Right? So it's not showing, but look how many times it bounces off this first band. You see that? Then it bounces off in the gray section off this first line. Kind of holds this consolidation and it drops, bounces here. You see how you could have played this? And you could have sold through here. These spots right here. This would have been a tough place to read with just this, using this overlay and not using the second shorter band. But you can kind of get the point. It broke through the WAP, so you could have played this off, sold it, and then ditched it when it dropped past it, which it did, and then played the bounces. Okay? Pretty cool, right? So let's go to and add the other one on to get things really confusing. So now since I changed the colors, it's gonna, you're gonna know that your short time frame and your long time frames. So this is basically like a scalping play. Now, if you think about this right here, this guy, and what we can do, I got too much stuff on here. Anyway, let's just imagine that we circled this part, just this part right here, which was a period for what, a day? Okay. And go back to that 5-minute. This is the same part. This guy right here, same part. Okay. So this gets pretty sketchy looking when you look at a 5-minute with these two overlays going. But there's a lot of information going on that I'm going to explain. And if you ever get confused on how to play this thing, just hit me up and I'll help you. So for instance, we know it likes to bounce around this area, right? You can see that. It's bouncing off the blue. So what we're playing here is like a scalp. This is just a short. We're just playing off the bands. Bounces here. We don't confirm. You can play this bounce right here because it's still bouncing off here. You can tell the patterns. It dropped big time here, but again, you can play the longer bands for that part. And then you sold it right here, right? Because the bounce, see the bounce is how it plays? Now it has a long ass candle going down. So it's breaking this VWAP. So you sell it. You wait for it to come here. Then you buy it back. And you just keep doing this over and over. And then when it becomes real like bullish, screw it. Here we go. So if it plays like this, and then it bounces back up, and then it goes up more past this VWAP, right? you're going to play this sucker longer, aren't you? You're going to wait until maybe it comes up here and then falls back down, right? So this gives you like, some kind of perspective on how to play your trades, a little differently than, throwing some wedges and lines and, Elliott wave retracements or Elliott waves, all that other crap, trying to figure this out. This indicator is doing the work for you. That's what's important. Now, another cool thing about this indicator, and let's take just the short one. Let's put that one on for now. Oops. That's weird. So let's go to like a 30-minute. And you can use the short wave, the short bands on a 30-minute too, and find your bounces. It's all about patterns, guys. It's all about where the patterns are on the bands. So you have to study your charts. You have to study it with the bands on there, and then you find out where this thing likes to bounce. Look, right here in that second deviation. Likes to bounce right there. So that's how you would have played it. Fell here, it broke. Went down, bounced right off off the first deviation. So those two areas is where it likes to bounce. It's like probable guessing, I guess. But it still works. You can still use this thing and make good money. I don't want to say a ton of money because it all depends how you trade, right? So, for instance, right now, you probably wouldn't mess with it. I mean, you can play it here, but you definitely want to see what's going to go on next right here. So the way we figure this part out is we have rules. Okay? So let's go to like a 1 minute. Let's find the rules. So our rule is like, look, not a lot of volume. See, candles are small. If it breaks this plane completely, we can play this. We can play it all the way back up here again, and then we can sell it. Okay? So that's how it works. You just change your time frames. Now it's holding on the 2 minute. So you could sell this or just hold on to it. And then wait. Now it could break here as well. Right? So it's kind of risky playing on these shorter time frames, but with the visual indicator like this one, it's a lot easier. Okay? So 3 minute still, and this is a live trade. This is going right now. Okay? So it's still holding that on that line, so it's safe. So let's go to like a 10-minute time frame. Oh, wait a minute. Now we're seeing red candles. So on the longer time frame, it's still looking pretty bearish, isn't it? So is that safe to hold? That's interesting, isn't it? It could just play like this right here. This, right? Could play like this maybe. Maybe another green candle bounces, puts right here. But eventually, it's like a magnet to this blue line. It's gonna fall there. And if it breaks that, it's gonna fall here. Okay? So you would have sold here, basically, is what I'm getting at. Because this is your highest value, isn't it? Right? We can put this on any time frame, and you can get an idea. Now, if you go onto a shorter time frame or a longer time frame, if you will, you're not really looking at this part here because it's really hard to know when to trade this. You're looking more at the squeeze of the bands. So the squeeze is where it goes real wide like this, and then it sucks in. And it might, over the weekend, being Memorial Day, it might play like this. Okay? Where it just goes into this like very consolidation, boring trading. And the way we kind of see what's going on is how these bands are forming. Okay? So the closer they get, that means that there's definitely some price confusion going on. Everything's getting real tight through this area. It's no longer, $300, up. It's like $100, maybe that. Okay, that is like 300. You see what I'm saying though? Like it like right here, it's a lot higher. You see, all the way up to 7,800. But right here, 73 to 75 is $200. So it's getting tighter. Okay, so something's going to break soon. So here's where the magic comes with this indicator. If you go up here and you put both of them on, like so. First of all, it confirms a few things. It confirms that, that's why it's doing that, okay. It confirms that we're still bullish, or bearish, I mean. Right here. This is where it broke both of them. The pink line is important because that's a longer look at it, right? So we know we're bullish on a longer time frame. Or I'm sorry, bearish on a longer time frame, and bullish maybe right here. We can play these bands a little bit. And you just keep moving this out on different settings for crosses. So a cross is when there's confusion, when there's a divergence of the price going up or down. It's really hard to know what way it's going to go. You just know something is about to happen. Okay? So this is a perfect scenario. Here's your cross. So you could tell these were getting very close together. And then there was just like, okay, something has to give, which it did. It went down, right? It hasn't been that high since that cross. So now this one is it's, so basically think of it like this. This gets closer, it's a little easier to get up to, right? So you could play that as like a scalp. But the farther it goes away, that's how much farther it has to go. That's a lot of work for trading. Okay. So let's go to let's see if we can find a cross. Here's a good cross. So this was when it was in that, that bullish stage. There was actually a cross back here, right? And it went down, and then it broke here. There's another time frame they actually had the cross. I'll see if I can find it. But here's the cross again. That showed even more bullish patterns. And again, we're just playing these bounces. Look at that. Right? Bounces perfectly. So you just wait for it to here to see what it's going to do. And you see it doesn't really break. This is all retail, guys. They drove the price down, institution, then the retail brought it back up. Institution's like, what the hell, let's go again. So it went back up. And then the institution drove it down, just like they did last time here, over here. Retail guy's like, no, no, no. Institution's like, no, we're going down now. Right? Retail. This is all retail again. Institution's like, no, we're going down. Okay? I know, there's a lot of psychology when it comes to trading. It's how people, this is what this looks for. This looks for the psychological aspect of people trading. This band, it looks for it. So you play off these bounces. This is key. You play this. This is very, very important. Huge important. I can't stress this enough. When the coin, when the candles are bouncing off this pink, you play the coin. You play the trade, period. Even this, you play it. Because it didn't break all the way. Okay? That's very important. It broke here. That's when you don't play it anymore. That's when it's bearish. Okay? So, you notice here there's a cross. Now, I mentioned this Friday. Something is about to happen. And this gave me that reason right here. That's where we see some divergence going on. Right? The bands are pointing downwards, not pointing upwards. This was up, so the stock was going up. Now it's pointing down, so the stock is going to go down. So the way we could play this scenario, actually, let me just delete all that. Okay. Play this scenario here, right? Let's just say it goes like this, okay? And then our other VWAP is kind of going like this, sort of. Okay, we're just having fun here, okay? Okay. Just drawing the bands. Like Bob Ross. Okay. So let's just say, for instance, it wants to play a bull again. Well, we know if we keep playing these bounces just like this, look guys, it's losing that bullish momentum because it's still diverging down. So you can tell that this thing has to break up like it did here to be a bull again. So it has to go like this somehow. Okay? So then when it's going this way, we know that the price is going to go higher. See that? See how it's going up? Boom, that's how it works. Okay, so it's a great little indicator for finding trend patterns. So the next thing you can use this for, and I would keep 390 as is. 390 is very, very successful. But this is your indicator. You can play around with it however you want. But let's just say you go to the 70 and let's change it to 29, which 29 is 14 times 2.5. That's how the calculation works. That's a month. So it's looking a month back, right? You'll notice the bands get smaller. Oh, wait a minute now. What could I use this for? This thing's very powerful. So if you go to an 8-hour time chart like this, let's remove the let's uncheck this one. You see how simple everything is on this? Okay. We could play off these bounces. You can see it kind of rode here on this blue VWAP, and then it dropped. And then it kind of skimmed it here. You want to play it here. It dropped again. This is where you would have played it, like everybody else. And it stayed above this, so you know you're not going to let it go. If it drops, that's when you sell it. It dropped a little bit here, but you still would have held on to it. Here, then it dropped. It failed here. Failed. Failed. If it goes up again, it fails. Does that make sense? So this is a smaller, these bands are tighter. So they're reading a lot differently now, as you can see. You can play this on a very small time frame as well. Okay? And you can see squeezes going on. Now this reads off volume. That's why it's so jittery looking. But you can play the bands perfectly. It looks confusing, guys, but what I want you to pay attention at is how the bounces are and where the bounces are happening according to the bands. So you could re-verify things over and over and over, to kind of figure that out, where you see where these price bounces off of on these bands. Okay? So that's very important. You blow it out, look at more. And something like this, you could look at the 30-minute. Notice that it's getting into that maybe a consolidation phase where it could just hang around in the 72 range, drop back down, or climb a little bit higher here and then sell in the drop, right? Sort of how it's been playing out. Kind of held on here. Then it went back up and then it dropped. Okay? So that's what these are for. Now, when it comes to using the 390 with the 29, you could do that as well. I don't want you guys to feel overwhelmed with this process. Okay, so here's the crossing again, like I was saying. So it crossed here, it went up. Notice that? It crossed again though, and then the price went down. So those crosses are very important when you're playing your trades. Are we with me so far? This is pretty easy, right? So let's just say you just want to look at the weekly. Okay, it's going to average a lot less noise than the 390 would. So let's uncheck the 390. Let's keep it at 29. Okay, and let's go all the way to the weekly and see if it draws a band. Oh, look at that. It did. It is drawing a band, isn't it? Perfectly. All the way back here. Stops here. You can still kind of play the VWAP though. So it's accurate, right? It's accurate. It's playing off this VWAP. It drops in the oversold. Or overbought. It never gets in this oversold area yet. We haven't even tested that area out on the weekly. And it got overbought. And it sold. Then it dropped down here. This is where the bearish part was, this area. That's when I knew when it was struggling to stay above this blue line that we were going into a bear market. So, and what's interesting too, I want to show you guys, is if you look at the dots, how I'm moving the dots, that's 1 week. That's what that's looking at, weekly. So that's, each dot represents, in between is 1 week. Okay. This is how I knew it was bearish, because it never got above this 10K. Okay, and then this is going up like this now. So is it possible that it could go down to that 58 mark, like I said before? This would be the first time, but this would be, guys, a complete reversal. Right? This was like a little reversal here, but this would be complete. Okay? So if we go to like another stock like gold, for instance. Okay. Oh, because the market's closed. Let's try SP or something. I'm sure I have something that will draw some bands for us. There we go. So pro shares, okay. Be stupid. Goes by the squeezes. But you can kind of see how this thing works, right? Bounces off that blue perfectly. And that's how you play this trade. If you were doing a swing trade or holding it for a long time, that's your indication right here. You would have put an alert right off this blue line. If it goes beyond it, which it did, you pay attention to it and see if it's going to break the next week. Down or up, which it went up. Then you would have sold here based on how it's performing on these bands, correct? You see that? Very important. Very important to pay attention to the patterns. It looks a little overwhelming at first, but when you get the hang of it, guys, I'm telling you, this course that you guys are doing is going to be child's play. Like the money that costs for the course, the money that you're going to be making off based using this indicator, especially if you can do this full time or day trade. Oh man, it's going to be fun. I can rest assured. Okay. So that's a cool thing too, is you look at trades like this and you know that it's kind of in that overbought area. So you know it could drop any moment, right? So you probably want to sell up here. Cut your risk. Now, could it climb higher? Sure. But at least you're making profit. It could drop and bounce right here again. Or all the way down back here, right? I don't think it will. It'll probably do something like this. Bounce back up. Just a couple of ways that you can use this guy on any time length and get patterns of where your bounces are and where it's oversold or overbought. And you can do that with crypto just as much. So crypto is more volatile, right? Let me see if I can get this to read a little better. Again, because there's just not a lot of fundamentals or a lot of history to these coins. So, and it's real sporadic looking. They're not fun to read at all. So, right now it's in that overbought area again. But you can see that it does like to hit that last band sometimes. So it could go all the way up here. Is that a play that you want to do for this much percent? That's up to you. That's totally up to you. But there's so many coins and trades and stocks out there that you can make money with this band on a daily basis that you won't have to rely on holding coins anymore, right? So keep that in mind. I'm trying to find like something that looks like a good buy. And again, this is on a smaller time frame setting. Here's Poe. Now Poe's getting into that position where if it drops, you know, look where it likes to bounce off these first deviations. Boom, 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 boom. All through here. Boom. So you know that this sucker could probably drop more, right? So you're not going to buy it yet. You're going to wait for a confirmation of right here somewhere. And then you can play it. And you can make profit. And you could make profit just to the blue line if you wanted to. That's still a nice percentage, right? So that's pretty much the indicator in a nutshell. If there's any more questions, like I said, just hit me up. Setting it up or whatnot, or having problems, or just feeling overwhelmed with it, I'm here to help, guys. I'm here to help. Just remember, you know, just the disclaimer that don't use this to sell as a moneymaker for yourself, or you'll be removed from access. Okay? I appreciate you guys doing this course. This was my first time ever making a course, so I'm sure it was rough around the edges, but it was fun also, and it taught me a lot. So I hope you guys make some money. Thank you.